Yeah. Okay.
Hey, Yemi. So we're gonna do a one-on-one Zoom here.
Yeah.
Yemi, you've been with us for a while now. What is it, a year and a half, 2 years almost?
22. Yeah.
Yeah,
Year and a half
in the
now.
beginning of 22. It's been at least a year, right?
Yeah. We started talking, I guess that was about February-ish, January, February. And then I think I joined with you in March. So, or
Yeah,
somewhere around that time.
that's good. How's your trading been going the last year and a half? I know we talk a lot on Discord one-on-one.
Yeah. No, it's been going great. Like I said, before I met you, it was just going like everything else with the market. But then, you kind of helped me get that all straightened back out. And it's been going good now. It's been consistent. It's not, I don't want to say it. I'm not like, skyrocketing up, but I'm not skyrocketing down. I'm just kind of creeping up.
Yeah, just
Getting that good.
keep getting those base hits over and over, and then you got a lot of runners on base. Eventually, clean some home, right?
Yeah,
I think that's how baseball works. I'm not sure about the analogies much, but
it's a money ball strategy. Just get on base.
Moneyball, yeah, just get those high, what is it, high on base percentage, and then
Yeah.
get them cheap too, right? All right,
Yep.
so
But
I
it's
know
has
you had
been
a few
going.
questions ready. It's up to you how you want to do them in a specific order, or if you want to just read them out the way that you wrote them before.
No, so just the main one I wanted to ask was about the safeguard trade.
Okay.
You've talked about the rolling. And I know you've mentioned to me before, it's just like I said, it just hasn't clicked yet. When
Yeah.
you say, you have the put debit spread and you roll it down to like 25 with rather than the 50, you're taking your initial credit there.
Right.
And then after that, I mean, it's still, you can still get a max profit, right? But it's just like a lower amount, I assume.
You wouldn't actually get a max profit. Good question there. You would get slightly less because it depends on a few factors like the day's expiration is the main one, and also
Mhm.
how far in the money or out of the money it is. If the put debit spread is in the money, then and let's say it's about a month or so left, you're gonna have some good credit on those by rolling it. If you're near expiration, like a few days left, and it's pretty far in the money, you can get pretty much max. Like we're talking zero point 0.5 or 1 or so less
Yeah.
premium than what the width is. So if you had a 25 width roll, and then you might get 24, 24 and a half out of it in that case. In
Okay.
other cases, if you're, a month, 2 months out, and let's say it's pretty close to in the money, maybe just slightly in the money,
Yeah.
on a 25 width, you might get maybe 12, 13. It depends on a lot of factors there. So one of the things that I like to look at for that safeguard trade is see what your initial debit spread was for the cost. So
Hmm.
usually we're debiting around 8 or 9 or so, right? And that's for a 50 with spread. If we're able to roll down the bought put 25 points and then get at least that 8 or 9 premium, sometimes a little bit more, obviously it'd be good too. Then you essentially have a free debit spread at that point because you paid 8 or 9 in your initial debit. The roll is giving you at least 8 or 9. So then you have another 25 with spread because you rolled down 25 points, and then you still have that credit there. I'm gonna
Yeah.
open
So
up
with
the I'm gonna open up the whiteboard to make it look a little bit better.
Yeah, that's what I was hoping you do.
Let me see if it's working here.
But so wouldn't that be something you'd want to do every time? Or I guess you just think,
Possibly. If you want to make the trade safer, that is one way to go. Can you see the whiteboard here?
it says it's loading.
Okay.
Oh, yep.
All right. You see it?
Hmm.
So I'm going to do just a quick sketch of what the trade will look like. Let's say that current price is over here. For a safeguard trade, we're typically going to look at a put debit spread somewhere around here. See these lines and drawings here. This is our put debit spread. Then we want to pay for that put debit spread by selling naked puts even lower than that, usually pretty dramatically lower than where the put debit spread is, right?
Yeah.
So down this point, let's say it's just a 50 with, and then we have a lot of time before it gets to these because we want to go really far out of the money. We want to make them very safe. And obviously, the further DTE you go, the more out of the money you could go to still get pretty good premium on it. If you did this 30 days, 45 days, you won't get a ton of premium unless you get pretty close to that in the money. So we have a lot of time when you're first starting out the trade. Yeah, there's your cursor too. And then collaborate, so you can move them too if you want.
It said I can add my idea. So
There you go. If you want to add something, feel free. So let's say we're around 120 DTE over here. And let's say the market doesn't really do much for about 60 days or so. And then pick a different color here. Red means bad. So then the market starts to drop around here. And let's say you have about 20 or so days left
Mhm.
until it hits this expiration date. Right here, we're in the money. So this particular bought put that you had, you could roll it down to around 25 points. And again, I'm just making up numbers on the fly here. It's not going
Yeah.
to be exact, but if you go over here, then your 50 width turned into a 25 width. And that will give some credit because this put that you bought is going to be worth a little bit more since we're already in the money. Does that make sense?
Yeah. So I guess the question with that, can you see my cursor?
Yes.
So I guess I was thinking when you're saying rolling to roll this one closer, it would make it a smaller put debit, and then
Yeah,
it could still be maxing. So either way
that's a
works,
good
right?
point. You could do it that way too. It ends up being very similar in the end in terms of your outcome. It's a little bit more of an advanced strategy. You could move the short put up or move the bought put down. There's
Yeah.
pros and cons to both of those. If you roll the short put up, you typically won't get as much of the credit as if you roll the bought put down, just because
Oh,
this bought put is already in the money at this point. And let's say the market was all the way down here, it would be even deeper in the money than the sold put right here, right?
okay. So you
But
would get more credit for rolling
you would get more credit.
this.
Now that's the pro to it. The con to it is if you roll this one down, suddenly it's a little less likely to get in the money at expiration.
Right,
If
because
you
you're going
rolled the
with
short up, then it's a little bit more likely. So it's a fine balance between the two. I've tried both and looking at it, it's very similar in both
yeah.
regards. So if you want to possibly get more on that 25 width afterwards, maybe that'll be worth the full 25 or 24, then rolling the short up might make some sense, especially if you could pay for the initial bought put debit spread. I'd rather get a little bit more premium that's guaranteed. Essentially, what we're doing is we're trying to lock in a little bit more guaranteed profit in the put debit spread by rolling the long down. And again, the
Okay.
goal is to pay for that initial debit. So again, let's say that I paid on white and color. Let's do a different one. All right, so let's say I paid 8 for the PDS here. Maybe this roll will take in, say, 10 or so.
Oh, okay.
So you're ending up about break even with commissions in this regard. But then you have a 25 width that could make on MES 25 times the 5 multiplier. You can make an extra $125 off this. Right?
Okay, I didn't realize it would take that much. I guess I was thinking it was gonna be just a like 10, 20 bucks. And this
It
looks
could
like
be. It depends. Like right now, with the market that went up a lot, and we closed one
yeah.
of these safeguard trades, we were able to close these naked puts. And I
Mhm.
was thinking about closing the put debit spread too, and just getting out of the whole trade. But these were only worth about 2 or 3 total because the
Mhm.
market just shot up. That it
Yeah.
wasn't even worth it to bother. I might as well just leave that as a hedge in case the market drops again.
Yeah, I mean, like you said, it's already paid for from the
Yeah.
naked post, right? So
Exactly. Paid for with good profit because yeah, we're making more here than we bought this for.
and then I guess I've kind of messed around with when I started, I was doing your exact safeguard trades, but sometimes I even look because I know we talked about, or you said in the video, I think you can do like the bigger tail, smaller trap, or
Yeah,
smaller trap,
a lot of
bigger.
different ways you could go about this. So you
So
could do
go
bigger trap here. So let's say the same conditions. I could maybe go higher and make it a bigger width. So maybe 175 width or so.
Mhm.
If you want to get the same overall credit when you're starting the trade, the naked puts would have to be a little bit higher because we have to take in a little bit more premium than we did on this one. You could do it as a complete hedge where we keep these around the same as it was in this initial condition. And you can enter it for pretty much no net credit or very slight net credit. So
Yeah,
then if the market doesn't drop or if it goes up, at least it was a hedge and then nothing really happened. You just broke even on it. So
yeah,
one
I
of
know.
the issues with that is you do use a little bit of your buying power, but it's just a safeguard, to make sure in case the market drops, you might make even more money on this because it's 100 with 100
Yeah,
times 5, you can make $500 on that one off a
yeah. I know you
thousand,
mentioned that one.
$1,100 trade. So that's a really good return.
Yeah, I know you mentioned the like basically break even credit on it. The only problem with that I saw is where your naked puts have to be closer to the strike.
Yeah, a little bit closer. We're
Well,
in
yeah,
one
you're
right
ready to be
now
assigned.
where we entered pretty much at the money at the time where MAS was. So I entered it around here. The market's up quite a bit from there. It's not showing a loss because naked puts went down quite a bit, and they went down
Yeah.
more than the debit spread did. So it's essentially going to be maybe a break-even trade. And I'm still in it in the end. We still have about 70 days or so. So we'll see what happens if the market drops again. It could be definitely a lot of different strategies we could do. We could move these, roll down, say 50 or 25 to pay for it, keep the naked puts on. You could close out the naked puts first and leave the put debit spread on with it. That's a little bit dangerous at that point because you could close these out, but you could still didn't pay for your debit yet. So you could theoretically lose in that case. But
Well,
yeah,
if you
if
close the
you're pretty
naked,
sure that the naked puts aren't going to go down that far, it's probably okay.
I
And
got
we did that recently a few weeks ago, where I got rid of the debit spread first, and I left the naked puts on. I think I
hmm.
said it backwards. So sometimes you could close this first and leave your
Okay,
naked
yeah, that
puts
makes
on.
sense.
Yeah, so you still have risk on the table by leaving those naked puts on, but made really good profit on the put debit spread. And you could also factor it in, when you do the wheel strategy that we talked a lot about, where you're looking for your cost basis. So
Hmm.
your cost basis essentially is if you got a sign on your naked puts, you also want to consider the credit you're getting for the put debit spread. Now lower the cost basis. Essentially, your break even is lower than where your naked puts are because we're going to profit a lot on the put debit spreads. It's another way to
Okay.
think about it. So, like in that last case, if I close these out first, I'm still locking in the profit on the PDS. My cost basis will still be a bit lower than where my naked puts were.
Yeah, so like say you took in 40 for your naked puts because you normally go around the 20, and then you would
Yeah.
add 8. So really your cost basis is 48,
Yeah. You can
right?
also divide by two if you're doing two naked puts.
Yeah, sorry.
Because if you're getting a credit on
Three.
one, you consider the two nakeds. But yeah, it all makes sense. There's a lot of different ways to go about these that are not as straightforward as, sell your PDS at a certain price, sell your naked puts at a certain price, wait
Yeah.
until the outcome happens. I mean, that's perfectly fine to do when you're a beginner, even you're intermediate, and you'll probably do very fine doing it that way. But what's interesting about this trade is there's a lot of different management techniques we could use. And I'm starting to show a few of them with members where, you could roll the PDS, you could keep the nakeds on, you could get rid of the nakeds. Another one I didn't mention and I haven't done yet, you could close one of your nakeds and leave the second one on,
Oh, I
especially
didn't
if
think
that
about
first
that.
naked got good profit.
Yeah. So just leave
You get,
one hang out, and then if it gets done, only one.
yeah, you get a little of your buying power back. You're also lowering your risk because you only have one naked
I get
instead of two.
if you did it that way, you'd want to make sure you close that naked. That would cover the put debit spread costs, right?
Ideally, yeah,
Yeah.
because
Or I
then
guess
at
yeah.
that point it's essentially a free trade or maybe a slight profit trade.
Well, I'm sorry,
Like
I guess it wouldn't matter.
most of the management that I do on these, I want to make sure that I'm at least locking in at least a small profit, no matter what happens after a certain management. So again, if I'm rolling down the PDS, getting a good credit for that, rolling down 25 and taking in say 20 or so, like that might pay for most of these naked puts anyway. So little things like that are very useful because then again you lower the risk because you're locking in some of that profit. Also, if you close the naked puts a little bit earlier, sometimes I don't necessarily close these naked puts at 90% profit. In the last week or two, you saw how a lot of these naked puts were closed, 20, 30 days out, which is very short, but we're selling them for around 20 and we're buying them back for, 12, 10. So that's
Mhm.
already a really good return in just about a month.
Yeah. Yeah, I closed a few today actually when the everything just spiked up.
Yeah. Yeah, we closed one today and I showed members we had three others that I could have closed if I wanted to. They were all about a
Crazy.
10% gain. And I think one or two of them was a month. It's really hard to not take 10% in a month if it's already there.
Yeah, no,
Yeah,
I think I'm
yeah, the
pretty
one
sure
trade we did today that I closed, it was like 8.5% in about 26 days or so, which
no,
is
these trades are
amazing. I mean, do that every day of the weekend, twice on Sunday if you could.
absolutely. Yeah, I think I closed the one I think you posted it was it was a shorter DTE, and
Yeah.
I took in a little bit less, and I was like, but I closed it. Like I said, when I did the math, it was like 6%. It was like that's easy.
Right.
Done.
Any other questions on like when to enter 112s in terms of your account size, like when you're trying to scale them in or add more positions?
Yeah, I want to ask about the scaling in a minute for the account size, but
Yeah,
going back to the question on these trades, like today was crazy amount. And I know you do like every other Friday, so like with it being crazy high today, if
yeah.
it's just say it keeps going up another like 3%, would you would you still kind of stick to the plan, or would you kind of go a little lower? You know what I'm saying?
Yeah, good question. I did actually mention that in the Lance's Workshop channel near the end of
Okay.
close today, so definitely read through that. It was very tempting to enter in new trades because I had a lot more buying power since I
Yeah.
closed like quite a few already a few days ago. Gold went up quite a bit, and my gold position alone was up about $700 or so. It was
Jeez.
down a little bit, and now it just shot back up. So I had a lot more buying power. I could have easily taken more trades. I decided not to because yeah, the market went up so much today. It was up almost 2%. There's a good chance it could bounce down in the next few days. I mean, obviously, it could go up even more, and then you might have to enter at an even higher high. But I think there's a good chance to see a little bit of a lower part. I mean, there's a gap to fill as well. So you could consider waiting until part of that gap starts to fill or gets close to it and then entering in there.
Yeah, that
Um,
first candle of the day was just whoop,
yeah,
straight up.
it was just straight up. You saw the CPI data, it's like slightly lower inflation. Market just shoots up like it's no
Yeah,
tomorrow,
that was
which is
insane.
awesome. Um, you can mechanically enter them in every 2 weeks, like we do too. I'm trying to be a little bit more active with groups because a lot of members are like, "Yeah, can I get a little bit more trades than just these, one every
Yeah,
2 weeks?" So I know about a month ago, I'm trying to lean into ES around January for 2024, and my account size could handle it now, but I'm just trying to stagger in my 112s. I'm doing more shorter dated ones, 30, no, not 30, about 60, 80 or so days because I'm still getting good credit. I'm not getting the full credit at the 120, but it's still getting good returns. And a few of those I just closed out because I was planning on them to usually hit the profit. And I tried to time it out where I was going to make the profit around Christmas, end of the
right.
year. So then I have a lot of my buying power back. I could start the ES. And I decided to close a few of those already. So there's a lot of ways to go about that. Mechanical every 2 weeks is the easiest way to go. Hits your target profit, then get out just enter in that systematic approach. When you have a little bit more buying power and you can look at some of the technical analysis we look at on our channel, you can decide to enter in a few of the shorter data at times. Just be careful because the VIX is really low right now. We're at
Mm.
14 or so. So there's a good chance it could bounce up. And then if you're entering when the VIX is at 14, and then it's going up to 20, 25, it's going to hurt, especially if you're buying power. That's the main thing to consider.
Right.
Like the
Yeah, that's
position
what.
itself might be okay because you're really far out of the money, but
Mhm.
with the VIX going up, it's going to use a lot more of your buying power, and then it's a lot harder to enter in trades at that.
Yeah, that's what's nice about those safeguards too. Is like you don't really have to worry too much about it. Because I think last week because I actually entered an ES, I did one
Yeah,
the first week in November,
yeah,
and I was just like, I was at the point my buying power was good. I was like, I'm gonna just go ahead, and I think I entered it like point. It was like a 6 delta. It's like a 4 delta now. That was after all the went like that.
right. You remember around how many DTEs it was? Was it near 120?
I think it was just I think it was 130.
Oh yeah, really far out.
It,
It's already a pretty good profit then because you entered
yeah,
in early November.
it looked good today.
Yeah,
Everything looked good
it'd
today.
be tempted to close it out, but I'd probably wait a little bit more, get a little more decay there, especially if you can pay for the put debit. One of the goals is to pay for that put debit, have it as a free hedge. Get rid of those nakeds and just let it be. Like we got a lot right now that are just put debit spreads that are around 4,000, 4,100 or so. There's a
Yeah,
good chance they don't worth anything, but we already locked in the profit anyway.
that's what's nice
So
about it. It's a bonus.
exactly. And what's also good is by entering in new positions at this point, assume the VIX stays where it is, you're able to lower your buying power because you're going to see with the span margin, you have all those extra hedges on. So if the market does drop, some of those hedges will pay out really big. So,
Yeah, no, that's nice. So when you get into the ES, are you going to do are you going to do just one a month, or are you going to try and do where you have enough to do every 2 weeks with ES? Does that make
yeah, for the ES, I'll do once a month at this point because the ES safeguard will be about $11,000 per trade, so a bit of a sizable number there. I was going to do ES 1 month and then do a few MES staggered
okay.
in the rest of that month and the following month, and then do a second ES in the third month. I
Oh,
think I actually calculated it out and we could work on that together in terms of how much you want to use for the strategy. But I did one ES, then one MES 2 weeks later. Then the second month I'm doing two MES, one MES.
that's right. We talked about this.
Yeah, and then the third month I go back to the first month, ES, MES. So we're essentially going seasonal, like 1 month and third month is the same, second month and fourth month are the same.
Yeah,
Eventually get to the point where you're just doing one ES every month or every 2 weeks, and then it'll be good.
right. I guess I know this is always the tough question with the span. I know like with MES, you get a sign, it's like $1,300, but it would be less because it drops so much.
Yeah.
I think your mic's going down a little bit.
For MES, can you hear me?
Yeah, now I can.
Okay, so MES, it's about 1,300 or so, depending on where your strike is, because you could easily figure that out from, or approximately, just look at how much it costs to buy an MES contract outright at the current price. And then it's gonna be less because we're selling naked puts really far away from it. Usually when you buy an MES, it's around 1,500, 1,600. But since we're going much lower, it's usually around 1,200, 1,300 in most cases. Makes sense.
Yes, well, okay, that's what because I remember whenever I always get confused. I always follow the rule, but when you say use half of it, if you use it was like 600, I guess it makes sense. 500 to put it on, 500 extra thousand. That's still you need an extra couple hundred. But you're right. I guess if it's dropping a little bit, would cost a little less.
Yeah, that's true. And remember your put debit spread could get some profit too. Like assume you get barely a sign on that, MES they can put, and you're gonna need about the 1,300, but you made 250 on the put debit spread anyway. 50 times the 5 multiplier. So even though you're using around 1,300, you're profiting 250 on that put debit spread anyway. It ends up being close to that 1,100. So I found $1,100 per MES or $11,000 for an ES is pretty reasonable in almost every case. And that's
Okay,
just a quick ballpark number to use because it could easily change over time, but like that's pretty reasonable for pretty much every time I've seen
okay.
the market.
Because I think that's what's good when you're just mentioning if you close one of the nakeds early, then you don't have to worry about getting a sign for one. You just leave it on and be good. So
Exactly.
that way you could, I mean, because I was looking at the ES, because I've got the two on it. You get signed two, that's just going to need a whole lot of cash. But you have it for following the strategy. But if
Let's
you close,
go. Let's
get a
go
sign.
over it. It hasn't happened yet, but let's say there's a big market downturn. How would you deal with the naked puts? Would you want to get a sign on them? Would you want to roll them first,
Well, that's what I
close them out?
I guess like you said, I kind of follow like the low mids. I probably roll it. I probably roll it one time,
Yeah,
and then get a sign. And if you roll it, go down and out to break even or very very little credit,
yeah.
and that's the
Good way
way
to
out.
go. Do you know when you would roll? Would maybe when it touches in the money or when it's very close to in the money?
No, I don't know that. I
Yeah,
guess that's what I got to kind of get set. I guess I would kind of do maybe the week of, because you say the closer to it, be the better
yeah,
time. So I
yeah.
guess I would.
That's true.
I guess.
Especially like with the wheel strategy too. So people will do like sell a just cash secured put, wait
Mhm.
to get a sign. Best 2 times to roll is when it touches in the money or as close to expiration as you can. Because if you wait until 1 0 DTE, then you're getting all that theta decay in the option. So that's usually the best bet. If it touches in the money before that, like a month or so out, you probably want to roll at that point because if it keeps dropping from there, which would be extremely rare. I mean, we're looking 18-20% drops here.
Yeah, I think I'm 19, 20% away right now.
Yeah, exactly. So if it drops, 25%, it's gonna hurt a bit. No, that's the one thing that's gonna hurt the strategy, obviously. But you need a very significant downturn, talking 20+%.
But that's where the temptation is to just get a sign right away. Because if it drops like your black swan event there, when you start rolling the 7 days or
Yeah,
7 day at the money calls, whatever,
yeah.
that profit's really good.
Ideally, it'll be good. Unfortunately, you can't get early assigned on these. You have to wait until expiration. So
Oh,
yeah, that would be good to get early assigned. Like people get freaked out, like, oh no, I got early assigned on a cash secured put. And now I'm like holding this thing. Like, yeah, but you already got all that extra theta decay earlier than
yeah.
you normally would. So if you wanted the stock or ETF anyway, it's really not a bad deal.
So, sorry, I guess another question back to rolling the safeguard naked puts. Um, I was about that. When would be a good time to roll it? Would you just roll it a month, or would you go another 120
I wouldn't
DTE?
go 120 there.
Just make it a completely new one.
It would be maybe 7 days to 30 days is probably a good range on that because we're trying to take advantage of a lot of theta decay to get out of the contract at that point. Like we're not necessarily trying to profit a ton of it. Although if the market drops that much, there's a good chance for a rebound. I would look 7 to 30 days, somewhere in that range. If you want to take in a lot of premium and you're able to manage it pretty actively, I'd go 7 days or so. Especially if you're really close to where the naked puts are. So let's say you sold naked puts at say 3,400 and we're down to say 3370 or so. At that point, you're close to in the money. I'd be selling weekly around the same 3,400.
Okay.
If it kept dropping even more, then I might go a little bit longer out, go 30 days out, just to get a little bit more of that initial premium in. Just wait a little bit longer for the recovery. But that's just my opinion. It's kind of a art over a science, I think, at that point.
Yeah.
And maybe it happens once every 3 to 5 years, give or take.
Yeah.
It's hard to say. I mean, the last year and a half has been really good for the strategy, so obviously it could happen at some point. But it'd be good to be aware and know what you're going to do beforehand.
Right. No, that's what knock on wood, I haven't had to deal with that yet, but I should have it set and ready. I know we've talked about it before. Just can't, I keep saying I'll do this thing, and I'm like, well, maybe I could do that. So it's
Yeah.
kind of whatever. Or
It's good
I need,
things to at least maybe paper trade, like different situations where you're selling naked puts close to in the money, and then you get a small drop, and you're almost mimicking like the big black swan in your case, but it's on a paper trade anyway, and then see how you would manage it.
oh,
And
that's a good idea.
try to imagine that the paper money is real money. Obviously, it's hard to do that when you're
Yeah.
paper trading. It's never feels the same as if it's actual money in your account, but you could mimic different situations and almost like practice mode, and the airline pilots and space pilots, they go on their super fancy like screens and whatnot to practice the crazy situations they do. So that's definitely something to consider. Got about 10 more minutes more. Any other general questions?
No, that was pretty much it. Just kind of want to go over that rolling of that and see how to do it.
You did ask about strangles, if
Oh,
when to
that's
roll
right.
the
Yeah.
strangle side. Not challenged. Okay. So the way that we do it, or the way I do it, is we start around 0.07, 0.08 delta on the strangles. And then if it hits 0.3 delta, that's where it's getting closer to in the money in one side. And then I'm going to roll the unchallenged side to try to take in a little bit more premium and lower the break even at that point. Because if you're taking in more premium on the roll, so again, SPY or MES around 44.50. And then let's say we sell a 4,900 and a 3,900 or so. Let's say the market drops, it gets to 4,000. So you're close to in the money at that point. I would roll the call side down a little bit because then you could take in more premium on the call side.
Okay, that's what I was tempted with. I didn't follow one of yours. I just kind of did one on my own, and I did a on gold. That's when it was going nuts. I had like
Yeah.
it was like 1,600 and 21, 25. They were both like 3 deltas. I just did like I'm just gonna do this. And of course, it shot up like 100 points or something.
Yeah.
So I was like, there's gonna be some call or like reversion there, but I was tempted to take that 1,600 and roll it to like 17 or 1,800.
Yeah. It's
I
a
just
tough
didn't.
one. That's more of an art than a science too, in most
Yeah.
cases. You can look at technical analysis, see where the recent support, recent resistance lines are, and try to sell it a little bit past that. So I wouldn't want to sell like roll up to like right at the support line because it might hit that if it does recover. Also, sometimes the premium you're taking in on the rolls aren't really adequate for the new risk that you have. Because again, if you're up here and then you roll that down, suddenly this side could get challenged too.
Right.
And you gotta factor in how much premium you're getting for it to even be worth it or not.
Yeah, when I was so far away, I could have gone to just outside expected move and basically made more than I put on for the strangle.
Yeah, like the last few weeks, if you look at gold and oil, you could go really
Nuts.
far out of the money on these. And 0.03 delta is still paying like really well compared to the buying power you need.
I meant to screenshot that too. I was looking last night at an oil one. I was just looking. I was like, as far away as it was like a 2 delta and a 1.
Yeah.
It's like you taking 400 for 800 cash. I think because I had 2
That's
on.
crazy.
Like take
That's when
it.
the volatility was so high. I actually looked at one a few hours ago. I was thinking about selling oil like 60 days out, just the put side, not the strangle. And 0.03 delta was still paying a few $100. You only need about 1,000, 1,500 for the actual buying power. It's amazing.
No, it's because so I think it because I love doing just the safeguard trade. So I thought making that my core thing, but to hit my monthly profit, I thought maybe I'd throw in just as safe a possible strangle.
Yeah,
Just yeah, that and that's why I was looking at those like those three, 2 and 3 deltas. Like you get two,
yeah.
$300 right there. That's
Nothing wrong doing that. I've been adding on one, like I added a CL strangle recently, like last week,
yeah,
because the volatility went up, so I took advantage of it. It's already up about $100 in about a week, so it's close to actually closing out if I wanted to. Yeah, and that's a good point too. To reach your monthly goals, that it could get pretty deep in terms of like how to analyze that. Like you
mhm.
want to see how much you're actually taking in like around now, middle of the month, and see did you reach your goal or not. If you already reached your goal, you could consider strikes for end of December, January or so, knowing that they're going to close out in around December. So you're kind of starting off your December income, right?
Right. Yeah. Yeah. Okay.
That's probably a better way to go because then you gotta like be a little bit more proactive about it than reacting to it. So if you're not reaching your goal in this particular month, I wouldn't recommend doing 15-day strangle or 7-day stuff too much. You can consider a few of those just to boost it a little bit, but you don't necessarily want to go too dramatic there because then you can get in big trouble, obviously, if you're getting really close to the money.
Well, I guess if it could be good, if I could figure out, I thought if I went lower deltas, it'd be less buying power. So put less up.
It is.
If I had enough to do three, I could just do one a month and they close out kind of a cycle. That's kind
Yeah.
of the way I was thinking about it.
Yeah, good way to go. One of the things with the safeguard trade is beginning of the month, I'm seeing where all my positions are. I'm using my graph paper, super high
Yeah.
tech pen and ruler there, and then you
Yeah.
can actually visually see like, okay, MES or ES is over here. I got all these positions there. So then you could also factor in approximately when they would close out. So in that safeguard trade, if you're doing a 120-day out, just a fairly standard one, those naked puts usually make their target profit around 90 days or so. So you could plan it out now if you wanted to for February even. And let's try to build up February by doing a 120-day out really soon. So I know you do that quite a bit anyway, where you follow along where I go in a lot of
Yeah.
cases. So things to consider is like, yeah, I'm already trying to build up my January, February income now, and then being more proactive than
Yeah.
reactive.
Work ahead time.
Exactly. Any other
Okay.
quick questions?
No, that was it. That's pretty much good.
All right, sounds good. So again, any other questions, feel free to let me know in Discord. Pretty active on Discord. Love hearing your thoughts. I love hearing all of your trade ideas too. Like you browse around a lot. You're like, ooh, look at this 0.03
Yeah.
delta pays this much. Keep those coming. You can
Yeah, I'm
also
trying.
share with the group too. Feel free to let others know in the group chat.
It's gonna be that one that's gonna stick and you be like, oh, that's a great one. So I'm just
Yeah,
gonna keep trying
exactly.
until I get that. But no, it's been fun.
Exactly.
I appreciate your patience and help with all my questions. I know I blow you up. So,
Oh,
but
that's fine.
thanks for
No
all you
problem,
taught me.
Amy.
It's been
That
fun.
was good, and I'll talk to you on the Discord.
All right. Thanks again, Lance.